Now, Devon Energy reported earnings on Tuesday with a lower than expected dividend that shocked many investors. Oil stock lower than invested dividend? Yikes. Now, shares in Devon dropped hard yesterday, around 12% in response to this earnings call and the increased amount for spending in Q4 of this year. Shah, what are you seeing in the energy market? And is Devon just getting more than it can chew with acquisitions driving up its expenses?
Vaughn, I think, is indicative of maybe where a lot of the rest of the sector is going. They may be getting a little toppy. I think they've got more room to run, but that's going to get thinner there as they go higher into the mountains. That air is going to get thin. Devon it's a great company. The dividend yield was unsustainable. It's $6.20. That cost them over $4 billion. Their net income available to common shareholders is a little over $5+ billion. So there's no way they could sustain that. They had a great first half. They were cash flow rich with the bolt-on acquisitions they had added to free cash flow. They thought they'd make nice payouts. Investors enjoyed that, but higher CapEx. 16% higher than expected. That's a problem. This is sort of speaks to what the Biden administration is trying to do, is push energy companies, and they are now pushing back. This is Devon saying, people, if you want us to spend on exploration and production, that's going to cost, that's going to impact our price, our share price, is going to impact our profitability, and we're not going to be able to pay dividends, which the Biden administration doesn't care about. Like, you shouldn't pay dividends. You should just repatriate that money and lower gas prices. However, they could do that. Impossible. But I think it speaks to the larger issue of how are we going to resolve this energy crisis? And right now, it's a question of, if these companies put more into CapEx, their profitability will be impinged to some degree. They'll still make good profits, but is that the direction? That's the direction they want to go in, but they need some incentives to do it, and they're not going to get it. So energy right here is starting to look a little thin.
Okay, well, Garrett, I'm going to bring you on because you were looking for some of these names you wanted some of these names to sell off so you can start getting them at some better prices. Do you still have that strategy in names like Peabody, Albemarle, Marathon, Cheniere? They're all reporting today.
Yeah, so the XLE was overbought, and it's been overbought the last 3 days. So we're starting to see a little bit of a reversal there. I have a spread on Peabody that I bought last week, the 23 and the 28 for December. So we got a nice little move there this morning, but I'm getting out. If you look at Arch Coal, you look at some of the other companies, they're peeling off this morning. So again, in this environment with the dollar rising, with a potential broader sell-off in this market seeming to loom at this moment, we have conditions in the energy market that are very similar to the top in the beginning of June, right before we had that big sell-off. And I'm saying that this sector has been a source of significant gains going back to the end of September. XLE alone going from about 68 up to about 92. What are people going to do in this environment in a recession? They're going to take the profits, and that can lead to a cascading across some of these sectors. So right now I'm looking at the financials and the techs. They've already gone negative. I think energy and materials will be next.